Hello, everyone, and welcome to today's major markets update for Friday, September the 2nd, 2022. U2 had a famous song, Sunday, Bloody Sunday, which was based on the massacre in 1972 of 30 civilians, or 26, somewhere around there, during the uprising in Northern Ireland. And today is definitely Friday, Bloody Friday. I hope you can understand the analogy here, as things are blood red in the markets and there is no letting up. So question is, shorter term, that wave 4 already top, it would be excruciatingly short, but we'll let the market decide which it is. Or was this a smaller wave 4 within 3 and we still get the larger 4 and 5? These are always the predicaments we have with the shorter term. And today I want to go a little bit more over the plethora of options that we now have, since there is no impulse higher. Since there is no impulse higher, it opens Pandora's box, as I said, with the plethora of options. Which of those options we're going to choose as a market, I don't know yet, but none of them look too great. So let's have a look at those. In the meantime, please never forget the trading rules, stick to them. Please remember, I cannot be right all the time. And if we are in a prolonged multi-year bear market, this is going to be a very tough market environment to forecast things correctly. I think the July into August rally went pretty well. I was simply tracking for an impulse, yes or no. That's all I was doing. Some people said it won't be an impulse. They were right. That's great, but you just didn't know. Other people said it will be an impulse. They still think it's an impulse, and you just don't know. So we have to remain objective. We get wave 1A, wave 2B, 3C, question mark 4 and 5. The market will let us know if we get the 4 and 5. The 4 and 5 never happened. So then we are going to another door. That is simply what we do. So that's why you never should bank on fifth waves, but wait for confirmation. In the meantime, there are many things you can do to try to improve your trading and understanding of the markets. Please use them to your ability, and never hesitate to ask me any questions, because hiding anonymity doesn't solve anything. I am here to help you. That's what you pay me for. And again, my forecast cannot be right all the time. The more and larger the overlap is, the more difficult it gets. So please bear with me, pun intended. Last but not least, there will be no update on Monday, because on Monday the US financial markets are closed in observance of Labor Day. That is the summary. I don't think I actually updated the summary yet. That's fine. So here we have the short-term wave count for the S&P 500. 3 waves higher into the August 14 high, I believe it was, A, B, and C in red. I've not given any larger labels than this, and now tracking a impulse 1, 2, 3, 4, potentially 5. While I was working, I labeled gray A actually here, gray B here, and a potential for a, I would say, flat wave 4 here. During market hours, and the market actually topped exactly and bottomed almost exactly where I wanted to, but I have no confirmation that the decline intraday has been pretty steep. And if we break below today's low, which is almost equal to yesterday's low, on the Dow Jones is already lower, then we're going to the 3800s at the minimum. So we bottomed here in the ideal wave 3 target. So we've already topped in the ideal wave 4 target zone in green and in blue. In blue is the 23.6 to 38.2% retrace of wave 3. So we have technically done enough for a wave 4. It's definitely a lot shorter than I thought it would be, but I'm not a market timer. I simply have to follow price. So we'll have to let this play out, but technically we could have done enough already for wave 4. That's definitely a surprise. But then again, in bear markets, upside disappointments, downside surprises. So I'm going to review the 3 main options I am looking at, and one of them might actually surprise you, as I haven't shared that with you before. This is the simple ABC higher. Starts to look dicey because we have soon 5 waves lower, and then a B wave can never be 5 waves. It is always 3 waves. So then we can discard this option as well. That's pretty much what we're going to do. I'm not going to set, oh yeah, we're going to get ABC higher way before. Eventually it will be the kiss of death, because the market will prove us wrong. Then we have this simple A, B, C lower, and we are now working on 1 of C. We soon get a bounce for 2 of C, because then this wave 1 will be an impulse, a bounce 3, 4, and 5. I know this doesn't rhyme with seasonality, but it doesn't have to. That's just the seasonality I shared with you yesterday. It doesn't have to follow it. It would be great. So far, it's been reasonably following it well, but it doesn't have to, okay? That's an average seasonality of about 100 years of midterm election years. The market topped almost at the 62% retrace, which is quite classic for a B wave, and then we get wave C. That would then complete primary A of supercycle 3. Remember the bigger picture, that then this wave A, B, C, and then A, B, C for a larger A, B, C for a larger B, and then the final C wave. So we could have already completed wave B here, and we are now in this wave C, and that brings us here. So the general path is, of course, just painted here to make it understandable and legible. It's not accurate in time. I just have to play with the space the charts provide me to make sure you can read it. I can try to compress everything, and then nothing is readable and fails to understand. So again, market timing is not of importance here, okay? It could all be kind of accurate, but it's not. I'm just looking at price. Price is hard enough to forecast already. So then we have, of course, black wave B, and then here now in black wave C, which is going to subdivide into 5 smaller waves. And that would then blue wave A, which is of a primary degree. Then we get a blue primary B back to about where we are currently. That's the assumption, etc. Okay, so that's that. Very simple, ABC lower. I know this A is not really a clean, clear impulse. Can try to make it in some sort of diagonal, but looks okay. Remember, if this is a supercycle 4th wave, pretty much anything will go, because we're in a very confusing market environment. Lots of overlaps, lots of ABCs. There is no must rules. Even 1, 2, 3, and 4 can have overlapping structures because of diagonals, all that good stuff. So please keep that in mind. We can even have ABC 3rd waves in larger 4th waves. So that brings me to the most exotic wave count. And honestly, it wouldn't surprise me if this is going to happen. It would kind of align the anticipated path for a final wave 5/C with what is here, that we're going to get an impulse lower. But this impulse will be then actually wave 5 of a rare expanding leading diagonal wave A. So that means that this black wave A hasn't even bottomed yet, and we're going to simply move it forward in time, and then we're going to get black wave B, and then we're going to get black wave C. Again, it's very difficult to know exactly what the market is doing. As you can see here, I can interpret this data in now 3 different ways, with one most likely being discounted soon, meaning the ABC lower. We need to go back above last week's high, 4,200, to suggest that is the case. That will lead us then to a C wave and then a larger C wave. Okay, that's then the preferred path for 4,200. This starts to grow on me, so to say, that we're going to get this impulse 1, 2, 3, 4, 5. We're still only in wave 1, and this can target as low as 3,000 to 2,800 easily. Again, it doesn't match with seasonality, doesn't have to, but this path currently lower matches, of course, this path currently low. So that's 2 in favor of 1. Then we have a expanding, leading A wave diagonal, we get wave B and then wave C. So now we're still in this path, we simply have to move everything forward, okay? This is, by the way, the monthly time frame, and that might then show up quite nicely on the monthly time frame, where if we would zoom in even more, of course, wave 1, 2, 3, 4, and 5, meaning 2 and 4 are up months. And that's exactly what we then have here. This is the up month, wave 2. This is the up month, wave 4, it's July, and this is, I believe, March. And then the internal scribbles cannot be caught with, of course, a monthly resolution. So then we simply move wave A to about here, wave B to about there, and then we still get C, etc. So the general path will then still be followed. Let's see if this is going to unfold this way. I have no way of knowing that this is the case. Okay, if you want to have a nasty looking market correction, then don't look any further than the Dow Jones. I'm going to pull up the Dow Jones chart in a moment here, and we're going to look at the monthly time frame. Okay, you want to see a very complex correction, then look no further than the bear market from 2000 into 2003 for the Dow Jones. Technology sector crashed loud and clear. The S&P 500 was somewhere in between, but this is a bear market for 3 years in the Dow Jones. An unbelievable mess for the first year and a half. It didn't really get clear until almost at the end of the bear market. So this is something we can really experience, but then on a even longer drawn time frame. This was most likely a cycle 4th wave. So if we're in a super cycle 4, expect anything. Like I said, anything will go in a 4th wave. I don't even know how to label this actually correctly, other than this looks like an A, B, C, and the rest is your best guess will probably stick. So anything will stick in a 4th wave. Just please be aware of where we currently are, and that this is a very general path which has to fill in something like this. So please remember, so this can be really, really tricky. Very fast, large swings within a monthly time frame, and it wouldn't surprise me if we get anything like this over the next decade. So please bear with me. And that's why, of course, when we talked here in late 1999, early 2000, nobody knew that this would be the path. It's just impossible to know that this is the path. All you can do is kind of set expectations on where we expect things to bottom. And this is not to say I'm hand waving myself in innocence, but just to get you accustomed to how large bear markets look. They don't have to crash just like that. That's what everybody thinks. It's not necessarily September 2008. Okay, it's not necessarily summer, spring of 2002. That's the easy part, but you can see how difficult it is. And this is where everybody gives up. This is where everybody thinks nothing works. Well, the market decides that this is somehow a valid corrective price action. I don't know even how to label it, ABC, probably. So please bear with me on that one. And that would fit, of course, with all these ABCs that I'm foreseeing, but I can't fill in the exact detail. I cannot stress it often enough. That brings me to the NASDAQ. The NASDAQ would look better actually with a lower low as well for this 3rd wave, then a 4, then a 5. This whole rally yesterday into the open today looks too suspect for all of wave 4, but I will let the market decide, especially considering how the technical indicators look like. They look more of a 3rd wave, still within a 3rd wave setup than anything else. Same here for this wave count, bigger picture-wise. So here we have A, and then we're going to meander sideways. So this would be A of B, B of B, C of B, etc. So again, many options, plethora of options available because of all this price overlap. But this would then be the impulse. So for now, I think the focus should be on this impulse lower. That's the preferred path. What happens after that, we'll let the market decide. Then we can start looking at some of these other options I shared with you for the S&P 500, as well as here for the Dow Jones. So here's the Dow Jones. Again, we got a false breakout, a classic 62% retrace of the entire decline into June. That's classic for a B wave. So now we should be in a C wave. Again, we are close to this ideal wave 3 target zone. We can still go a little bit lower to about 31,000, rally and then drop. We need to see some positive divergence develop on the technical indicators to know that this red wave 4 is going to unfold. I find the current price action from yesterday's low into today's high almost too short for such a wave degree. Even wave 2 here, which was in my humble opinion a zigzag, lasted 2 days. This was barely a full day of trading, and it should then morph into either a flat or a triangle, and I don't see it just yet. The other option here is also the expanding diagonal, wave 1, wave 2, wave 3, wave 4, and now setting up for 1, 2, 3, 4, and 5 lower. And this is, of course, looking much, much lower, similarly to what we have for the S&P 500 that we see here. This one, either the C wave lower, or of course this expanding ending diagonal. It's very possible. I haven't seen too many yet that argue for it, but looks good. So we'll keep that option on the table as well. For now, the green path is of course the focus, just as I showed you for the NASDAQ. The blue path is the focus, and as I showed you here for the S&P 500, let's see if I can find the chart. The gray path here is the focus. All right, meanwhile, let's look at the new lows. They are still quite benign. I mean, it's not showing up in price, the current market crash that we're seeing, not even close to anything we've seen all year. So that's kind of interesting. Don't know yet what to make of it, but still too high, that's for sure. Summation index remains on a sell. Why? Because the McClellan oscillator is heavily negative. The potential positive divergence that we were looking for might get erased. I don't see it yet. It's back to where we were a couple of days ago. So we're still very weak market breadth. The market is weak. Meantime, sentiment-wise, we're not really at the extremes yet for underexposure in money managers. So this also gives us leeway to the downside. And similarly for sentiment, it's not extremely lopsided to the bears that can move all the way to the 50s to 60s, okay, high 50s, low 60s. So currently at 50, it's high, but nothing too extreme just yet in light of the current correction since the all-time highs. So as I said before, these videos are meant for a review of the bigger picture, not necessary for all the minute, tiny little trading details that I started with here for the hourly chart. Bottom line, if we go below today's low and yesterday's low, we're going to target this wave 5 target zone. We have several options still on the table. If we move lower, then I think this option is off the table because then we have 5 waves to the downside. And then we need to start to consider that we have a 1, 2, 3, 4, 5 setup in play. Very counter the seasonal path. Don't know yet how to resolve it, but that's just a seasonal average. And that would simply then move this anticipated ABCs further out. So far, so good. Alternatively, we have this expanding leading diagonal wave A, probably into year end before wave B starts. Don't know yet anything about wave B, haven't even decided yet if this is actually operable or not. It's simply an option I'm tracking. But the focus, as I said, should be on this impulse lower. If we move at any time going forward back above last week's low, which I believe is 43.20 on the S&P 500, about 12,900 on the NASDAQ100, and it is about 32,800, 32,750 on the Dow Jones. From current levels, we move above that, then there is no impulse lower, and then we are still in a set of ABCs to the upside and ABCs to the downside, adding further complication to this wave count. But for now, the technical indicators do not suggest such rally from current lows. If anything, this impulse path is still the preferred path. And with that, have a great 3-day weekend, and I'll see you all on Tuesday.